Hey, good morning everyone. This is Trader Tim from eMiniMind.com, and I wanted to highlight a trade setup that occurred later in the morning. It was kind of a dull morning today. Yesterday we had the hammer form on the daily chart, and then today, if I go to a simple 5-minute chart, most of the morning we just kind of drifted within that first 30-minute range. We had a very tight range. And then about mid-morning is when we started to get that breakdown. And given the context of yesterday, if I go back to the daily chart, we had broken above yesterday's high, the high price from yesterday, right around that 2,500 level. Once again, that big round number. We'd broken that high earlier, right away in the morning. And so I was looking for an opportunity to have this market be bought. And so what I like to do is use the NYSE tick for this trade. Now, this is I got the ES chart in front of me here, 512 tick chart on my right. And if I zoom in to the NYSE tick, we see that we have some low ticks down here. Low tick at about 850, 855, and then this low tick down here at 927. And it's not a super low tick, meaning, it's not an extremely low tick. The actual reading is only minus 463, but relative on the day, that's currently the low tick of the day, and it was the low tick at that time at 927. So what I look for when we get these low ticks and when the market's moving down, I look for an opportunity to get long when we have a low tick that lines up with the low price. So we've got a 927 low tick, and then we have a 927 low price. And it's simply a matter of you can do one of two things. You can get really aggressive and just buy the first little long opportunity. So just draw from that low price up to the very first swing high and take that very first retracement and just throw your stop one tick below lows. Or if you want to wait for a little bit more development, you can just grab from that low, let the market break the previous swing high as we did up here, and then let the market pull back to its 50% retracement and then ride that up to the negative 23% target. So I just wanted to kind of highlight that setup this morning. The same thing goes for if the market is rallying and we get a high tick at a high price, then I will look for short opportunities. So, like I said, it was kind of a stale and dull morning, but with a little bit of patience, waiting for a good setup at the right time, not chasing highs and chasing lows. If the market is dull and not really going anywhere, not trying to force something that's not there is a very pivotal characteristic that a good trader really needs to have, because you can sit there all day long and try to look for setups and force things, but really you will only end up doing yourself a disservice. So if it's a slow and boring day, either shut down and get away from the screen, or really practice sitting on your hands and waiting patiently for a good setup to come along. Because sometimes all it takes is one or two setups in the day that amount to a couple of good setups over a couple of days, and the next thing you know, you've had a great week. Whereas the flip side is also true. You have one or two forced bad setups right in the beginning of the week, and you kind of get into a rut, and that starts to send you down a little spiral, and then you have a couple more bad trades that you're just trying to force things and make up for money that was lost perhaps on Monday and Tuesday, And then next thing you know, it's Thursday and you've almost blown up your account and you kind of look back and say, well, how did that happen? So, good lesson today in practicing patience and in this uh, video, talking about how patience is rewarded if you just remain calm and don't force trades, don't force yourself into having to make a trade every single day. And with those two principles, patience and discipline, you can really help develop good trading habits that will result into a positive snowball effect and gaining momentum in your favor.